Hello everyone, in this video we will focus on introducing one index. Just one key index today. It's called SPY. So what exactly is SPY? Let's break it down from three angles. What? Why? How? We will analyze it using these three questions. The first, what? Let's start with what SPY actually is. Its full name is... Let me explain. First, it's Standard & Poor's Depository Receipt, that's SPDR, followed by S&P 500 ETF. In other words, you will see it listed next to the ticker. It's a SPDR S&P 500 ETF Trust. I missed the S&P on the screen earlier. And then it's one of the most popular ETFs in the world. That means it's a very popular ETF, a globally traded ETF. Widely traded around the world. It was launched in 1993. Yes, back in 1993, mainly listed on the New York Stock Exchange. Who's managing it? It's managed by State Street Global Advisors. It charges a low annual fee. What does that mean? If you buy the S&P 500 ETF, you will pay this management fee. But every year it's almost negligible, just 0.09% or 0.0945%. That's less than 1/10,000th, so very low fees. Now, what's its strategy and goal? Mainly to track the index, specifically the S&P 500 index. That's what SPY tracks. So what's its underlying asset? What's the base asset? It's a S&P 500 index. Exactly, SPY is based on the S&P 500. That's the index SPY follows. And this index includes 500 of the largest public companies in the US. How are these companies selected? Based on market cap, liquidity, and sector representation. Also, it reflects the overall performance of US stocks and the health of the US economy. And importantly, it's not fixed. It's dynamically optimized and adjusted over time. Each quarter, the committee adds strong performers to the index, adding them to the portfolio and removes those with weakening performance. Those are taken out to ensure quality and keep the index in a state of ongoing optimization. It's a dynamic process. So this is how the portfolio is built. It uses a full replication strategy, meaning it mirrors the S&P 500's component weights as closely as possible. It holds all component stocks to closely match the index performance. That's the goal of replication. So why invest in SPY? That's the second point. Why choose SPY? First, diversification. Even if you buy just one share for about $600, you are essentially investing in 500 of the biggest and most influential public companies in the US. The second advantage is liquidity. SPY is one of the most actively traded ETFs. It's highly liquid. It averages 57 million shares traded daily. Yes, 57 million shares per day on average, each trading day. You can buy or sell anytime during market hours. Funds move in and out with ease. And its returns have been solid. Recently, it's had a strong rally from 500 to 600. That's nearly a 20% gain. This rebound was close to 20%. Third, transparency. SPY is highly transparent. That's a third point. As an ETF tracking the S&P 500, its holdings are fully transparent. Investors can clearly see what stocks and allocations the fund holds. It also has low trading costs. As mentioned earlier, fees are less than 1/10,000th, and it trades flexibly, just like a stock. Another point is you can trade it with any brokerage account. It allows day trading and short selling, so it suits various strategies and needs. Now, what are the risks? The risks of SPY. First, market risk. SPY tracks the S&P 500 very closely. It mirrors the S&P 500, so that's something important to keep in mind. This point right here, really pay attention because it tracks the S&P 500. It carries a clear risk, which is when the S&P 500 drops, SPY will drop too. It moves with the US market. That's a direct exposure to market volatility. Second, sector concentration risk. Right now, currently, the AI and IT sectors have high weightings. So if those sectors swing sharply, the index will also fluctuate heavily. That's hard to avoid. Third, macroeconomic risk. For example, take Q2 as an example. The World Bank cut its US GDP forecast from 2.2% to 1.6% for this year. So what happens in the case, the market could turn downward, that could drag SPY lower as well, plus geopolitical risks also add to the uncertainty. So be cautious at times like this. Whenever the stock market drops and the fear index rises, it's hard for SPY to avoid falling, almost impossible to avoid. So now on to the third question. How do you actually trade SPY? How can you invest in SPY? How do you access the index? First, you can take a position at the current level. Let's use this price level as an example. You can consider a bearish position here. Right now, around 600, it's relatively high. Bearish position may be better. That's my suggestion. And it's not just the daily chart, it was falling in pre-market too. Look, it dropped before the market opened. Now take a look at the weekly chart. On the weekly time frame, this is the fifth week. After 4 weeks up, it's gone flat. Sideways now and facing resistance, flat action here. Looking at the weekly chart, it's up against the resistance. A pullback is likely. Resistance on the weekly chart may trigger a drop. Now on the monthly chart, to be honest, this level doesn't look great either. It's not looking too good. So cautious is needed here. Be cautious. Now on the G chart level, it's struggling to move higher. At this level, there's barely any upward momentum. Next, let's go over something important. Besides buying the regular SPY ETF, aside from just holding SPY shares, you can also learn about its options. Just to learn and study. This is for educational purposes only. No actual trading, absolutely no real trades, just study it first. For example, I think in the coming week, I believe next week, SPY might drop to around 590. So in the short term, SPY could fall from above 600 down to 590. From about 600 to 590. So how would we treat that view? How do we take a bearish position on SPY? Through options, specifically put options. There are a few key factors that I'd like to walk you through. First, the key factor, the expiration date. Choose the June 20th, which is this Friday. That's the first factor, expiration. Second, the underlying asset, SPY. Third, the direction, put option. That means a bearish view. It's a put contract. Fourth, set expiration to June 20th. So expiration June 20th. What strike price to choose? Strike price 590. Yes, go with 590 as the strike. That's the setup. We're choosing 590 as the strike price. So what is the option premium? It's $0.11, 11 cents. Let's lay out the setup clearly. Here's the plan. Asset SPY with a bearish outlook. Strategy, buy a put option, a bearish put trade. Expiration June 20th. Strike price 590. That means we expect SPY to fall below 590 by this Friday. From 602 down to 590 before expiration, the entry price is 0.11. I believe this could at least double. Yes, I think it could easily double. It only needs to rise to 0.22. 0.22 would be a 100% gain. I believe that potential is there. It's possible. Why that? As I mentioned earlier, the monthly chart is showing weakness. The weekly chart is also turning down, and the daily chart is struggling to move higher. No upward momentum means a likely drop. If it drops, the put option gains value. Alright, we will stop here for today. Today's key point, this is a short opportunity, a chance to short the SPY index. Thanks for watching.